Age is just a number. Unfortunately, a different one every year. Okay, good. So shall we go live?
Yes.
Everyone ready to go live? Okay, ready to go live.
Yeah, just to be aware, I'm arriving to the proper place in 5 minutes, so I might take a break like 1 minute, and then I'll reconnect or something. Yeah.
Okay. We're gonna be patient.
I'm sorry. Okay.
No,
Thank you.
don't worry.
Okay.
Dear friends, we are back with leadership in times of crisis. And for our first session that comes out after the full lockdown, in this semi-lockdown that doesn't look like a lockdown anymore, and gives us hope. But our first session is about, a deeper lockdown, and that's the economic lockdown that we're seeing. And the most important thing that would ignite the growth back on is investment. So I have an amazing panel of investors this evening with us. It's Simona Gemeneanu, who's running Morphosis Capital, a private equity fund. Is Andrei Dudoiu, who is running SeedBlink, an equity crowdfunding solution that has been very successful in the last months, despite the lockdown in Romania. And my good friends from the VC and my investors in FinTech OS, Dan Mihaescu from Gapminder and Stan Sirakov from Launch Hub. And I'd like to challenge everyone around the discussion, for a discussion around investment in Southeast Europe, investment in companies in Southeast Europe for the next 12 months. What have we seen in the last 3 months? What do we expect for the remaining of the year? What do we expect on an even longer term? And what are you guys individually in your companies looking for, testing for, and trying to avoid at this particular time? So that being said, why don't we make a short round and you do a proper introduction for yourselves, because mine was obviously too brief and not conclusive enough. Shall we start with Simona?
Hi, I'm Simona. I'm the co-founder of Morphosis Capital, which is a growth fund for SMEs in Romania. We invest 5 to 10 million in companies in 4 sectors, in technology, niche healthcare, consumer, and B2B services. We do minority and majority investments depending on each deal and the founders, but we partner with the founders. We never do buyouts. That's about it, about me. Andrei?
I don't know who's next, but because of the age, I will follow probably. Andrei, former banker for 20 years, entrepreneur since 2 years ago. I co-founded SeedBlink, which is an equity crowdfunding platform here in Romania, but with regional targets. We actually launched SeedBlink officially with the first first campaign in December last year. So 6 months already with 9 campaigns. We brought to the funding of startups, tech startups, because we are focusing on tech and tech related startups, more than 1 million euro in these 9 campaigns that we run on our platform, in a total funding rounds of 2.4 million euro. And we have already more than 1,100 investors recording on our platform.
That's what I called quite impressive for a startup these days. You being a startup as well.
Exactly. And we are looking for funding, and we got our funding on our own platform.
Dan?
Hi, good morning, everybody. Sorry for the chaos. I was driving like 600 kilometers today. So look, I'm the founding partner of Gapminder. Gapminder, it's a VC fund born in Romania. It's a $45 million fund. We focus on startups that are high tech, especially seed, potentially Series A, and we have a very small bucket of, let's say, acceleration tickets, which are between 50,000 and 200,000. Our seed and Series A tickets are on average of 800 to 1.5 million euros. We have some very good stories. We have two companies that are probably number 2 and number 3 startups in Romania historically after UiPath. One of them being FintechOS, where Sergiu is one of the co-founders. And the other one is Typing DNA. It's a company that learns the way you type, and is pretty soon you'll see also some news there. In terms of how we work, we go proactively for companies that have deep tech components that enable some very proven business models, and they accelerate their growth. We go proactively after what we like, but if anybody has an idea and wants to have a chat, we are absolutely open to enjoy it.
Okay. And Stan?
Thank you, Sergio. First, hello everybody, and really appreciate that you are taking some time after the lockdown is partially out to also join this chat, so really appreciate it. My name is Sirakov, and I'm actually partner at One Shop Ventures. We are a regional fund. We are currently investing out of our third fund, which is going to finalize at 70 million euro. We've been in this market for the last 8 years, investing in the region. We call our whole market to be Southeastern Europe. And now we write checks between 500,000 to 2 million euro. We invest in technology, in software and tech businesses. And I would say I'm pretty happy that we are investors in the #1 company in Romania, which is FintechOS. Actually, I wouldn't call them number 2 or 3. Just a joke with Dan. But yeah, before that, I've started my career in finance. Spent my first 10 years there, and after that, I founded a company back in 2007. Actually, in the dawn of the previous crisis. In the fintech space, though I didn't know what is fintech at that time. I didn't know the term fintech, and yeah, now I would qualify that as a fintech marketplace, but back at the time, neither of this was known to me. So again, like pretty impressed to work with great founders, and I'm honored to be here today.
Thank you, Stan. I invited Stan not only because of their outreach into the broader Southeast Europe, reaching us, but also because I think I figured about him personally, that he has an amazing network that grows and covers, I think, a worldwide Bulgarian diaspora and their contacts, and those contacts. Otherwise, I can't explain where you're getting all the people that you're talking to all the time that you can make me introductions with. Thank you so much. Now, I would like to ask each of you, how do you see what happened over the last 3 months? And how was the investment sentiment and the investment environment and the investment appetite affected for companies in your segment, for your current activity? Simona, you in Morphosis, and perhaps, broadening things a bit, your direct competitors, looking at private equity investments, Stan and Dan VCs, Andrei, the space of small angels contributing to crowdfunding, and let's hit it from there.
Okay, so if I may start, the investment scene in COVID times had a slowdown, and actually there are two schools of thought. One that says that we should stop investing and wait for better times, and one in private equity, not in VC. I'm talking purely about private equity, and one that says that's the time of your lifetime. If you have dry powder, go and get the best companies. I, for one, and we at Morphosis thought about these two strategies and decided to go on a hunt. Why? Because we really believe that good companies, you don't buy them on the cheap, even in crisis. And if you wait too much, there will be the horizon of the SMEs will be even smaller. They will have nothing to choose from, and you need to help them go over this period. So that was our strategy. So hence we had a defensive and a bullish strategy in the same time. One was to not to have a pipeline too small post-COVID, and one was bullish because we really think the best companies will reinvent themselves in this crisis and will become even stronger. And that's what we were very active actually in this period. We are currently working on 7 transactions. We have 4 offers in the market. Hopefully we'll close some of them, and no surprises in due diligence and so on. What I can say in terms of sectors, I think there are 3 categories of sectors. The one that was deeply affected that everybody knows, travels, hospitality, airlines, and so on, and no need to talk too much about them, automotive and so on. Some that were temporarily affected, but the fundamentals stay strong and that will recover post-crisis quite quickly. And here I would mention medical service, some of the medical services, supplements, and other businesses in consumer. But there are also winners in this crisis, and there are companies that did very well. And actually this crisis outlined some problems in the business models and companies that are active in digitalization, in IT services, in some niche healthcare, digital entertainment, e-commerce, e-payment, e-health, everything with E, I think is a good place to start with. And I think these are, if you find companies that are active in this field, they are the winners, and they will not be cheap, for sure. So I don't want to monopolize the discussion. So in a nutshell, I would say that investment arena in this 3 months and in the following 12 months, I think it will be a very active place to be. And that we as a fund, we focus on companies that are either in sectors that are temporarily affected and will recover quickly, or in sectors that are winners. We are not focused on companies that are in sectors that are severely affected. Just because we are not a turnaround fund, we don't know this. This is a completely different scheme. Yeah.
Super.
So,
oh,
okay.
Stan.
Sorry.
No, Stan,
No.
please. It's fine. Stan.
Thanks. That's firstly, we work only in the E sector, so only in the E part of the spectrum. So from that perspective, probably the companies are a bit less impacted. On the other hand, firstly, maybe to explain how we think, usually what you need to know about like venture capital and private equity fund, we have these investment periods and then we have the fund terms. And usually investment periods are between 3 and 5 years. So we have to invest the money in this period, and then we can hold the companies up to 10 years, sometimes even longer. And for us, because we are an early stage investors, we are we are probably first in line when it comes to first on the value chain. our thinking is very much shaped by what we see in the follow-on funds, predominantly in the United States and in Europe, predominantly UK. So I would say that in terms of sectors and industries, I'm not that much interested what is impacted now, because if we consider that we are going to be in a company for 8, 9, 10 years, it's going to go beyond the current cycle. But what I'm more interested in is how the change of behavior will happen. So what we used to joke, and probably everybody heard it, is that COVID has done for digitalization more than CEOs or CIOs in big corporates. You know, we are interested to see which are these trends that have long-term be impacted by these trends. And I couldn't say that we have yet a full grasp around it, but obviously there are obvious things like more e-health, digitalization for enterprises in general. We tend to invest more into the enterprise sector, you know, enterprise software. This is probably 70% of our portfolio. So there are a lot of positive trends happening here. But the other thing is how we look at the current environment. And I would say that we have seen, and to say business as usual, I think it's a stupid expression, because it's obviously that business cannot be as usual. If the world is locked down for 2 months, it's absolutely impossible. We have seen over the first probably months a lot of worries on the market. So I remember I was on a couple of calls with co-investors in the US, and all of them said we are looking just how to bail out our portfolios. And many of them, they are big funds, but on the other hand, they have much more investments and much bigger portfolios. So they were kind of completely out for new business, probably for the first 3-4 weeks. Now that things start to, at least you see how the crisis is going, people start getting more open and more investing into companies, but the terms and the normality is different. Like the multiples they're looking to see whatsoever are different, or the traction and the founders that they want to see is different. Mine still unknown part is, because obviously we are in an economic downturn, so how 6, 9, 12 months from now the investment climate would be. I think it's gonna be conservative.
And well, we're gonna get there, Stan. But let's.
Okay. No, yeah. Okay. Yeah. Sure. Sorry.
Thank you.
Okay.
Dan, now in a more proper place.
Yes. Thank you for your patience. Okay. So I absolutely agree with what was said before. So I'll add a few other things. It is a lesson of humbleness. Any crisis is a lesson of humbleness, and people are learning and acting accordingly. In the VC, high-tech VC and biotech VC type of, first priority of every fund manager was in the first weeks to stabilize the portfolio and secure that the companies have enough runway, which means enough cash for the next whatever number of months. In our case, we tried to do it for 18 to 24 months in most of the companies in the portfolio. That's a very intense activity to do it on a very short term. And it is very interesting that, you know, all the startup entrepreneurs have this big vision, these big dreams, and suddenly the world shakes. Suddenly the world shakes, and we have to adapt. And you have to be in business in order to grow your business. So the challenge was to make them understand, look, you need to pass this period, this maybe the rebound, and go to the recovery when your business will have a chance to grow. I agree with Stan that we as VCs have a long-term vision, so we look at the potential on the long term. That's why we didn't get out of any company. We sustained all our portfolio because we believe in what they are doing. Lucky enough, like 95% of our portfolio of the amounts we invested are into companies that are growing in this period, which means that we did something well in while choosing these companies, while investing, while helping them to grow. So this is half of the life of the fund manager. The other half, it's obviously looking for new deals. And there, I agree with what was said before, like people are seeing opportunities. There was a period of maybe not making things happen. There is a period of adjustments, of humbleness, and people adjust in terms of valuations, in terms of terms, conditions, and so on. What we've seen, and we've seen some studies, is that in these 4 months, for example, seed series, and we can go later into details, but there's a study from Redpoints showing that, for example, seed series has decreased in amounts and decreased in number of seed series, while Series A has actually been flat versus previous quarter, also in valuations, also in number of rounds. And Series B and Series C actually have increased, which means there is dry powder. There are bigger funds that have dry powder, and they are looking to invest into the better and more mature companies. While at seed, there is a bit, this period has been characterized supposedly by a bit of precaution, right? And stronger filters and adjustments and longer investment periods. I can go into hundreds of details if you want.
No, thank you, Dan, for now. Yeah, I think if we can move and go a little bit into the pre-seed space with Andrei. What have you seen happening? First of all, maybe you brief us all on, you know, how is Seedling doing, and who are they competing with? Are they alone on the market? And what do you see? How much traction do you get from the startups that are actually seeking pre-seed rounds?
Okay, or maybe just to make a brief about equity crowdfunding. Maybe there are some persons in the audience which are not aware about the concept, which was not an innovation of ours. We were starting our journey as entrepreneurs with human finance, willing to help the ecosystem to evolve, and also the startups to get knowledge in order to get funding. And then we have seen this gap, or not any relations with Gapminder, the gap on the pre-seed market for the startups in the tech area. And we have been looking to the very developed markets as US and UK, and we've seen a very important traction for this new concept called equity crowdfunding, which has the big benefit, and we fall in love from the very first moment with the concept of democratizing the investments in the startup ecosystem. A crowd, that's why the crowdfunding is a deviation from the reward crowdfunding, which is the pioneering on this. But a crowd of investors are putting money in a vehicle, in an SPV, which is making the investment to a listed. This was taken over from the stock exchange, but the concepts could be a comparison between them, but we are different animals. And this vehicle, this SPV, is making the investment gather from the crowd in a startup. The good feelings we had about the concept is, the first, we are bringing more money to the table. So besides the business angels, which are familiar with the risk in investing in startups, with small amount of money, normal people can become investors in the tech startups. In our case, we are starting from a ticket of 2,500 euro. In UK is different. You can invest starting with 50 pounds or maybe less. But even so, with 2,500, I think it was a good benchmark for people with some savings coming to the table. And as I mentioned, we have already 1,100 investors recording on the platform. Out of them, 150 already made investments in the 9 campaigns that we run on our platform. On the other side, the benefit for the startups is they of course, it's a new source of funding. And on the other side, they are preparing for the next stage of evolution because they have to implement already a sort of corporate governance in the relationship with their new investors. On the other side, being a new concept, there is a lot of noise on the campaigns. Also because of our noise we are making with our newsletter and marketing, but also the mass media was very interested about them, and new startups are coming to us and asking, they are willing to go for a crowdfunding platform in order to promote better to the mass market their concept and their products. So basically, this was it. This is in brief what we are doing. We don't have competition as such in this part of Europe. In Poland, there are some, I think, 3 platforms of equity crowdfunding. They are reward crowdfunding platforms, but it's a different concept. Smaller amounts of money, and the ones that are putting money there, they are not becoming investors. On the other side, what we have seen recently, the European Parliament approved 1 month ago, in the middle of pandemics, the new regulation for crowdfunding that will come into place next year, and will be across Europe. All the countries in Europe will implement the same with starting with January next year. So will be probably a new trend for other platforms or other new players to come to the market, to this market. And another, I just want to make a mention about what we have made so far. All the campaigns are a sort of clubbing. So we made the deals along with VCs as Gapminder here, also with business angels, pools of business angels, also usage with a new vehicle, Leverage Capital. We are part of the deal with Sanopas. We have other VCs, and of course a good partnership we have with Tech Angels, also Growchanu. So it was a sort of consolidation or alliances between the players in this pre-seed market in order to help the ecosystem. And also the campaigns we have made in the startups, the feedback we had from our investors is also, besides the investment itself, it's also a social impact need or approach from the investors. They want to participate to this development of the ecosystem of innovative startups.
This is actually quite positive. The fact that we see now the entire ecosystem starting more to function, and more cooperation across different stages, across different players, and I think this is really something to hope for. While perhaps on other things there is less hope in the horizon, given that we expect still, and there are macroeconomists from all banks, like central banks, and many of the commercial banks are looking with quite a bit of concern at the evolution of the economy, not only for Q2, which is basically dead, sacrificed, and dare to be thrown in the trash, but what we will see in Q3 and Q4 this year. How big of a recovery do we expect? What are the remaining pains that will be there with the entire economy and will affect the investment sentiment and will affect the investment climate? And from your angle and from where you're sitting, how do you see that affecting you and your investments over the next, let's say, half year?
You want to start from the other way around so that we don't bore people? Yeah.
What is the other way around that doesn't bore people?
From the last people. That's
Okay, okay.
last.
So
Yeah.
let's go back. Let's go back into Andrei. Andrei, what do you think people are doing now with their, money allocated for small investments in potentially revolutionary techs in equity crowdfunding? What do you see? Are they holding it and going back to T-bonds?
Actually, half of our campaigns, so we, as I mentioned, we have 9 companies listed, including ourselves on SeedBlink. Half of them were the listed companies the campaigns were made during the pandemics. So I think the first one was Sanopas. We said, better than the others about that deal. And we were afraid to go a bit because it was the Black Friday. If you remember, everything was collapsing on the Friday before, and we were afraid to launch the campaign on Monday immediately after. But the campaign was closed in 1 hour. 100,000 euro was raised in 1 hour on SeedBlink, and the others were doing the same. So as far as the let's say the micro investors are concerned, my feeling is that they are quite interested in investing in good companies and social impact companies also in this period. So maybe it will be helpful for the future. Also, other companies and other players to come on this table and to test this appetite of the small investors. Probably is this concept that in crowd as an alliance and as a team, people are probably feeling more secure. I'm just looking also to the corporate investors, so middle class investors with smaller savings, not big entrepreneurs with a big pocket or a big exit on their track. And probably also because of the pandemics and less spending on their side, they were more interested in investing. So it was also a positive effect on what we have felt and on the behavior of our investors. And every day we see more and more investors on our platform recording there. We, as I mentioned, and everybody knows, we are also a startup. We have to develop a lot the tools and the engagement of our clients and investors. But as far as we are concerned, we are just seeing positive times forward. Also because there's everything is a beginning, and
perhaps this is also because everything is at the beginning, and the amounts that people are contributing in the crowdfunding events are not necessarily the life-changing amounts. Exactly. unless very successful, life-changing amounts for them personally. Yeah. But what is happening there in the more structured investment space? Is there a concern about the growth? Is it a concern about syndicating? Is it a concern about perhaps the ability to raise the next funds? What do we expect for the next half year or so? Stan, in the broad universe where you're meeting with lots of other people that are doing investment, what do you see in this cascading ecosystem?
So I think there are multiple factors. Of course, I don't think anybody could predict in details, but firstly, I think Dan mentioned very correctly that VC activity in general haven't go down as much as expected, but also probably the fact that a lot of funds were raised in the last 2 years. Over, especially in the US and the UK, which are the two main technology hubs in China. I don't count it; it's a completely different story. So there is a lot of funds, a lot of funding on the market, a lot of funding possibilities, and that's why on one end this money needs to be deployed. So from that perspective, they have to go into companies, right? On the other hand, as you mentioned, we don't know how big the impact is because it depends how much order of magnitudes you are from the heated sector. So just to give you an example, I have friends in the travel tech, so companies that have raised literally hundreds of millions of dollars in the US and that have seen big hits. But if you're selling software to travel tech, you're just 1 degree away. And if you're selling software to the software provider of travel tech, you're 2 degrees away. So I think until it is revealed how much like your business would be impacted, we still couldn't predict. On the other hand, I think the general trend, so for the last 5 years, maybe, everybody was talking about like growth at any price. You know, you need to grow like 20% a month. You need to grow 3-4x per year. You need to grow this and that. And like it was growth at any price. Now people started to realizing that it's not just growth, but a sustainable growth, which is very important. And I was speaking with a co-investor in Silicon Valley last week, and he showed me this. You know, we were discussing a particular company. And he showed me, you know, before that, everybody like was like that. And if you have a company that's like that, like the multiples, the pricing would be severely hit. So if you're not growing, let's say 2-3 times a year, I'm talking more like early stage companies, 3-4 even, you'll be penalized by the valuation. Now that everybody is going down, there are a lot of companies still growing, but not, let's say, 3 times. So if you're growing 2 times a year, you're already in the bottom quartile, in the top quartile. So everybody is actually giving you a good valuation. So practically, I think things are readjusting on the multiples, like the valuation multiples, and the expected for growth. You know, how much do you need to grow? How much do you need in order to fund the next round, etc. This is what I see, and I believe VCs are not going to stop investing. They're continue investing. I think Q3 and Q4 will see more investments than Q2 because of the lockdown. But the conservatism would be implied into both valuations and the expected milestones.
Dan, I see you nodding.
Yeah, that's absolutely right. And I could notice also the differences between what Andrei and Stan were saying. And the truth is that the VCs are institutional investors. We are institutional investors. We have investment thesis. That's how we raise the funds, right? That's why people have trusted us with millions, tens of millions to manage them. So we have a huge responsibility. We have a huge capacity to understand the business models of all these companies, to help them really do this, you know, and really help them. This is a time, because the title is leadership, and maybe we touch upon that, but this is a time when leadership has to be actually very active, right? So we do that. We complement and help them, the teams. And as I said, we are very structured in the way we approach all the VCs. We know are very structured. We know what we want. We will continue. For example, I can talk in the name of Gapminder. We'll continue to invest in the same investment thesis until now. We will not change our investment thesis just because there is an opportunity to do, I don't know, something in retail for toilet paper. I don't know. We don't care about those short-term opportunities, right? So we'll continue to do what we wanted. So it's very simple for a startup to look at our site or to talk to us and understand what we want anyway, right? That's as simple as that. We didn't change because the lockdown was here and provoked a very deep economical crisis. We didn't change the investment thesis, at least in our case. And we do that because something was said here earlier. I don't remember who said this. This is very interesting, you know. Digital transformation of our lives has started like, I don't know, 20 years ago, but now has been accelerated within 2 quarters immensely. And this last quarter, it's amazing. What we see is that companies from our portfolio maybe had some conversation with their own customers delayed for March, April. In May, some conversation, a lot of, or more conversation has restarted, reconnected. And this is a good sign, right? And I think this is a trend that it's accelerating. Think it over. In the last 10 years, I've seen a study, and I mentioned it, I think, twice until in a few events. I've seen a study in which basically the VC activity in Europe has increased by 600%, 620% within 10 years, right? Which means basically there are opportunities here, and there are also lots of money available. I've seen another study more recently from Invest Europe, which show something amazingly interesting about the VC. The number of VC funds has increased dramatically in the last 3 years in Europe. And it's very interesting, the number of new funds in Europe has increased a lot, which means there are a lot of money available in Europe for startups, early stage and seed, Series A, right? And the benefit from getting money from a VC is not only the money, it's really the network, the help, sometimes the stamp that you got the trust of a VC, right? And with that, you can go further in the further rounds, which is important in the VC world because you need to fuel a very high growth by having multiple rounds. So in conclusion, for the next 6 months, we'll continue to do what we've done, looking at the same, deep tech enabled companies that are mainly looking at enterprise and B2B, maybe to a broader range, and that are born in Romania or in Central Europe.
Simona?
Okay, so I'll not repeat what my colleagues have said, but from the private equity angle, I think what is worth mentioning is that the big funds will become even bigger. They will raise even easier the money for the investments. As you saw actually during lockdown, many funds raised a lot of money. It is our responsibility to create a track record for our funds. As Dan was saying, the responsibility is huge because we've been trusted by our investors to create the climate and the track record so that the ecosystem grows and shows a path for the future funds, because it will be very difficult to raise future funds first time. If we don't prove the thesis we signed out to. That's from the point of view of the fundraising. It will be also an adjustment to multiples, I think, from the expectations point of view. And I think the way we look
at what is that? I remember your famous saying of 2009, where 6 was the new 9, and
yeah.
So
yeah.
how does it run now?
No, I wouldn't look like this. For us, because we look at good companies in the sectors that are winners or half winners that will rebound quite quickly. We don't expect a huge adjustment in multiples. In technology, for instance, I don't expect a huge, for the thesis we signed out to. For other consumer and so on, I think an adjustment will be necessary, because if we think about it, there will be a correction in the welfare of the population. So the purchasing power will be much lower. And that's something that all the studies prove. So I think there will be a multiple adjustment in this field. There's no magic number. I think everybody needs to do. And I think what private equity has a problem, because VC is looking more at the long horizon and the product per se. But private equity is looking at financials. A lot of the past, the proof of the past is a predictor for the future, which is not always the case. Well, now we are in a situation where 3 months it was locked down, so there is no financials for 3 months, or there is losses, but there is no top line. So how do you value this company? So I think every private equity developed their own intelligence around it, how quickly you rebound, lots of probability, sensitivity analysis. And we, for one at Morphosis, we still value companies based on 2019 and how quickly you rebound. Because if you take 2020, you do no deals. So, and you try to adjust through the structure, like introducing guaranteed returns, liquidation preference, sharing upside more to the founders of, if he overachieves the business case, something like that. So solving through structuring, hedging the risk through the structuring. So I think I went to too much detail, but
that's good. That's good.
Yeah.
You know, sharing details is about, you know, getting the ins and outs and the tricks and tips and tricks of the investment known to our audience, which eventually will, you know, make people better prepared to receive investment and to participate in the investment ecosystem, whether, you know, they will be LPs in your next fundraise, or whether they will be, you know, receivers of your next investment in their companies. I think it's, you know, sharing these details and letting people know how it's done and how investors actually think, both short term and long term. So thank you, Simona. In fact, we have a very, very active participant in the conference that has asked many questions. So I encourage everybody that is watching us here to ask questions. And Piotr from Warsaw has asked specifically to you, Simona, is the healthcare sector even more sexy nowadays?
There are different views.
And actually, I think if I broaden it to health tech, I would ask the same thing to the other panelists.
Indeed, indeed. I think COVID exposed lots of shortcomings in the healthcare system. I think public sector is failing everywhere, even in the Western countries that were more proud of themselves that they have, except for Germany probably and some other countries. But if you look at US, UK, lots of shortcomings in the system came to surface. I think COVID proved that telemedicine exists and it's possible. And I think I'll not touch health tech, but it's for us also a field of focus. In terms of more traditional healthcare sector, like hospital and so on, I think it's a different asset class. We don't invest in this kind of heavy asset intensive like Regina Maria or MedLife and so on. We invest more in rollouts. So I think this is something that the thesis stays. Like Dan, we didn't adjust our thesis. We were interested in this sector even before it was part of our thesis. I think some of the insights we collected during COVID made us go to targets that we didn't acknowledge in the beginning that they were good thesis for rollouts. Like imaging, or I don't want to say too much. I will not give up my pipeline, so sorry about that. But there are, for instance, lots of there are two schools of thought. There are companies that invested in healthcare, traditional healthcare, and they said well, it's not a sector to invest anymore. And there are schools of thought that say that actually it's a very good sector. We should invest even more because in the future, there will be more investment going to this sector. I think public sector will invest even more in the traditional healthcare. So it will become a challenger to the private sector because of the learnings in this. Not in Romania, we don't talk about Romania. In Romania, we don't know what's going to happen, but there are many other shortcomings. Okay. Does this reply, Piotr, to your question?
I think it does reply to some extent. He can't right now answer. And he has also another question on business continuity and how is this weighing on, you know, the assessment that you make to companies that you're investing in. Is this
the sheer continuity a topic? Do you consider different valuations? Because we covered the investment thesis, and I'm switching back the question again from Piotr to Stan and Dan. How do you look at this? So health tech, business continuity.
Okay, health tech. Stan, is it okay? Okay, good. Health tech. First of all, I think in Europe, Switzerland and Germany dominated the health tech, biotech, and those. Healthcare IT, it's feasible from other countries as well. So it's a very big difference of the concept. It's healthcare IT. And there are good projects everywhere in Central Europe. In Romania, we have at least two in which we invested as Gapminder. One, it's Xvision, which is used now in Timișoara and Bucharest. It's still used, and it was used during this pandemic for the second triage using this tool that is basically giving a red flag upon X-rays on the lungs. And basically can say, hey, it has the potential of a pneumonia, which is one of the ways they do the second screening in COVID-19 in the hospitals in Timișoara and in Bucharest. This is a tool that is functioning, it's very good, it's functioning, but it's healthcare IT, it's machine learning there, it's a great IT team that somehow broke the ice into the healthcare system. Okay. Second one is Medicai, which is the same. It's a team that has done previously another project based on machine learning. It does it now again for the liver. Basically, this is a very good team. We invested as well at a very early stage. And then later there was another round in which a few private investors participated, and a consortium, or let's say a group of smaller investors with the help of SeedBlink, if I remember right, Andrei? Yeah. Okay. So these are two things that we've seen on healthcare that are in the, let's say, startup stage. And both of them, I repeat, are healthcare IT. This is not healthcare. It's a very different concept. Business continuity. Well, you know.
Let me rephrase it a little bit for you. What do you insist on your portfolio on business continuity? Perhaps that's easier.
Yeah. So, look, we want our teams to focus on just a few things and to do these things, to do them right. This is at the beginning of in the life of a company. They need to do just a few things right. So we want them to focus on a few things which are mostly related to growth, more recently to, to still be in business. Now, some of them implemented some procedures, especially those companies where we have branches outside of Romania. There are some procedures that were done for and processes done during this pandemic. Most of the companies in our portfolio work from home, right? So this is the first step. But I started by saying we need them to focus on things. So, for example, we don't necessarily go by Excel in every week with every company in the portfolio. Only a few of them are the lucky ones. But if you know at least one, Sergiu. But so basically, we want them to focus on the business priorities. So once the companies have decided to put all the people to work from home and all this, I think the business continuity is not at the same level treated as in a big multinational company, right? We don't ask people to drive different cars. We don't ask people to fly different planes when they go to London or whatever. This is a bit too much for a startup, I would say. Okay.
I'm happy you mentioned it, because I think the sheer term of business continuity has a different meaning for a small entrepreneurial company, whether you're a startup in the VC point of view, a VC backable point of view, or you're an investable company from the private equity point of view. If you're an entrepreneurial company, your business continuity is bloody survival in the first place. You have to make sure that you reach the end of the year and you adjust your P&L and your cash flow to the reality of today. And I think this is a lot different from writing the procedures of business continuity planning and making sure that you access the company's network through the proper firewall when you connect from home, and that is vetted with 5 levels of whatever consultants from abroad that have, so I think it's a different way of doing the things, because for us in a small company, unless we are dealing face to face with customers, so hospitality, poor guys, everything else is, you take your laptop, you go anywhere in your bathroom at home, in your wardrobe, somewhere, and you start working the same 12 hours per day, because that's what entrepreneurs do. And then, this is the essence of the continuity. And then you start thinking what's going to hit and when that's going to hit, because some hits are going to be there, and what's the probability and what are the scenarios. And I think it's a lot more than the business continuity plan as such, and how this is written is more about how you make it happen. But sorry for my intervention, Stan.
If I can just add something, because we had this conversation before, it's like, it's so very pragmatic when you are a VC. You have to, sorry, Stan. So it's so very pragmatic as a VC. It's you care, the relationship is built at a very personal level, and you care about the entrepreneur that is there. And we drink a beer at 9 o'clock over Zoom, and we discuss about things, and we care about the business. We care also about the mood, emotionally, how we feel in this period. So I think it's a bit more personal in this period. And it's very good it is like this. I think it's one of the best ways. It's maybe the best team building we ever had.
Yeah.
Sorry.
Stan.
Fully agree. I think I'll start with the business continuity and go to digital health. So for me, 2 things were there, and we were from the day one very trying to help our portfolio founders with this. Firstly, it was the scenario planning. Now, we are minority owners. We are not there to manage the companies. We are just there to advise. We know that in many ways, founders know much more than us, because they are there on the field day to day. So what we wanted from the beginning, it was the first 2-3 weeks, is like to make this kind of a scenario planning. What if your revenue drops by 30%? What if your growth is not that? Or how much money do you have the banks? And we were insisting on this predominantly for the founders and the executive teams to have these tools in place, and for them to easily decide what they need to take over. And of course, we were there to advise, but we want this to be a foundation. If we talk for business continuity in times of the lockdown. And of course, the goal is to have enough money to reach your next milestone, which would allow you to go to the next fundraise, etc. And we, as you mentioned, Sergio, in the tech industry, we are very we are some kind of a privileged to be able to work from everywhere. But also one important thing is about your employees, because every startup, every new company, and every company in general, the most valuable thing in every company are the people. So how to make your team, sometimes it depends on what stage and what phase you are. You might face difficult decision to let some people go. You might, we have companies from both, we have companies hiring in this time. We have a company that's currently hiring 2 senior positions in the US. because they have fundraised, and now it's a good time for hire because a lot of talent on the market. But that we had companies that were facing letting people go. So how to make the morale, the people, the culture, you know, be resilient. So these are for me the two most important things in the time of COVID and the lockdown. As for digital health, I'm lucky enough, we have made 6 or 7 or 8 investments over the last 5 years. I call this digital health. It's only software and sometimes combination of hardware and software for health care professionals or for pharma industry, etc. It's from Slovenia, Croatia, Bulgaria, Greece, Poland even. What I could share 2 particular examples. We have 2 companies selling to pharma, and one of them is based in Slovenia, and they are kind of helping doctors be more productive, but pharma companies is financing the operation. So doctors are the users, but pharma is the customer, the payer. And they have a record quarter, Q2 this year. So because they are selling to pharma representative, pharma sales reps are not able to meet doctors, so they are eager to give more money for this company to do some kind of some analytics and certain promotion based on the usage they see in doctors. So, and we had another company that's in the clinical trial software, also for pharma. But on the other end, they've seen in Q2 a lot of deals delayed, and they couldn't actually sign a new deal because a lot of the clinical trials are postponed now. Hospitals are not working. Doctors are predominantly focused on how to fix the COVID crisis, and clinical trials are postponed. So even that 2 companies, identical companies selling to identical customers, we see a lot of differentiation. In general, I'm very bullish on digital health. I'm literally very bullish. I personally worked in the insurance industry. My wife is in the pharma. I'm very bullish on machine learning and AI and how it could make doctors more productive. In general, this is the things, and I think there is a huge, and of course, telemedicine. We've looked at a lot of telemedicine companies. I still have my question marks in the area, but it is proven that it could work. But I think software helping doctors be more efficient, more productive is something that's on my very high list, powered by machines.
Great. Andrei, perhaps, you know, what you do with your portfolio at that level of very early seed is not that much. You're not interfering that much with the lives of the portfolio, except perhaps making intros to the next level investors present in this meeting. But I wanted to appeal to the banker that is still within you, and how you read the macroeconomics, and how do you see things evolving over the next, I don't know, couple of years?
Well,
for the entire investment ecosystem. I mean, yeah, there is dry powder now, and we're gonna see still investments being made out of that dry powder. But what is happening longer term? What are the sectors of investment that would benefit or would be hit earlier, later? And
so to be
now
honest,
you're not an official banker, so you can actually speak your mind.
yeah, that's a very comfortable position, to be honest. Sincerely, I think it's too early to predict what's going to happen. We are at a very, very early stage of a change of behavior of consumers and of people. Also, the investors are waiting to see what's going to happen. So whoever bets now on a certain industry that is going to win, I don't think, honestly, is the right moment to make this kind of predictions. I also, being conservative from my my first life of being banker, I would say probably by the end of the year will be clearer what's going to happen in the world, in the economics, and what will be the trends. For sure, the digital transformation, it's one of the winners of what's happening right now. Healthcare, yeah, as already was mentioned, it proved it has a lot of need to invest in AI and in digital transformation and making the doctor's life smoother. I think the entertainment area will evolve a lot and will be changed a lot, and it will be challenged. But as we already know in the real life, I think people have a very short mind. And the behavior of the people, it's already just looking on the streets, and Dan was driving on the street. It's clear that people is back, and they were waiting to be free again. And I think what is clearly remaining from this short period of time, of 2 months or 3 months, it's really a different behavior in terms of digital and working from home and optimization of the working environment. On the other side, I wouldn't risk to predict too many things that will be changed. It will come if I would be able to do so. Probably I'll be in the chair of Elon Musk or so. But I'm comfortable here, and I'm just waiting to see the trends, and I will see step by step what is going to happen in the market.
Yeah, I'm gonna challenge you there. I don't think Elon Musk is predicting the future. I think he's just shaping the future by hypnotizing the entire world to invest in things that otherwise would not happen.
Exactly.
So I'm of a slightly different opinion there. It's for us, the bare mortals, that have to adapt. And we know if we create a tiny trend on a tiny niche, then we have achieved a major success.
No, I fully agree with
yeah. Thank you.
With this opinion about Elon Musk. So he's a change maker.
Yeah. Okay. Good. Now, there are people in the audience that are thinking, you know, what should I do best over the next, I don't know, 6 months, 12 months to be able to attract investment? And if I were to do it, should I do it right away, or hopefully, if I'm not desperately in need, wait 6 more months until things settle and so on? What kind of advice would you give for the recipients of investment?
I think it depends on the stage of the company, first of all. If it is very early stage, well, they have nothing to lose. At least they will get a conversation and the feedback, you know, so they should try. If the company is more mature, they should come with a plan, definitely with something in mind when they talk to an investor. But they should keep in mind the investment, raising money might take longer than before. They should take into consideration that the environment might change even to worse. So they should not wait too much to do it. They should do it. I mean, they should do what's best for their company. They should grow it, right? And if that means they need to go now, do all this effort to do the fundraise, even if it is not the perfect world, even if it is not the perfect moment for good terms, but they should do it. They own the company. They are probably the major shareholders of those companies, hopefully, anyway, right? And they should do it. They are responsible towards that company, towards all those employees, towards all those clients. They should do it as fast as possible, actually.
Outback then, absolutely. I think like it's easier. It's in the startup world, it's much more complex, because if you just have money for 6 months, you have to fundraise, otherwise you're doomed, you know. So so it depends on what stage you are. If you have money for 18 months, I would not advise you to go fundraising, rather to work on the customers, right? But if you have money for 6 months, it's different. It's different situation. However, because it's a personal relations, so go and try to understand. Even if you're not fundraising, it might be worth to try to understand about your potential investors. And in time of crisis, you could learn more for them, right? How are they acting, you know? And when things are good, everybody's good, right? But when things are not so good, like real relationships are shown. So it's a good chance for those people to try to assess investors, because as everybody, like, we are humans, we make a lot of mistakes. Sometimes we are kind of irrational, etc. So try to assess us as good as possible if you're not particularly fundraising. But if you have money for 12 months plus, go focus on the customers. You know, that's the best thing.
From my point of view, Sergiu, it depends in which category they fall. If they are winners, it's definitely if they need an investor to scale quickly and go in US and so on, they will be on a good foot to negotiate, so it's the right time. If it's temporarily miss, I still think it's a good time, because there will be lots of M&A in the area. So it would be good to take an investor to do the M&A, at least, if not something else. If it falls in the category where it's the most severely affected, this is where I think the structuring could help not to lose at a very low multiple your equity stake. And I would definitely advise to go into the government schemes, European funds, and so on, to get over this period with the cash flow problems, and then maybe come back to an equity investor. That's my view, at least. Yeah.
From my point of view, I would add more on, or stress more on the leadership need in this period, in each crisis period, as it was already said. And if the entrepreneurs have already fought for their products and services, and in the relationship with their customers, and for fundraising, for sure, now is the timing to fight more and to prepare better and to adapt quicker than it was the case so far. So just be more adaptive, have more courage in order to, if you trust in your business, it's the right moment to make the difference. Because in the time of crisis, you have much more opportunities than in a normal period. So for the Elon Musk ones, is the correct timing to be there and to make a difference.
And maybe just to add something, sorry, Sergio, on this. I believe our region, in general, like Central and Eastern Europe, is very, we are definitely builders, you know. We have a lot of portfolio companies that are competing with some players in the US or in the UK. And we usually say this, you know, like Americans, especially versus Europeans, they're very good at sales. And they're sometimes selling things like half-baked. And I think in the current crisis, where customers would value your product, there would be chances for European companies to fundraise, and where sales is not the only thing, and to become winners in this market. And I think if you also see a way how you could become a winner on the market, even if you're not fundraising, just to make your competition less able to fundraise, go out and do it, you know. So if you want to take over the market and you have a superior product and a good technology behind it, it might be a good option to go out, test your chances, raise more money, and actually suck up funding from the competition, and try to actually buy them, not literally, but kind of buy the best sales talent, buy customer scene, etc.
Okay. Well, it's an amazingly interesting conversation. I think we're getting to an end. I am supposed to ask the last question, and I think I can't ask the last question because there are so many. So if there was a question that wasn't asked, what would be your answer? And what would be your message to, let's say, someone in the audience that maybe is not an entrepreneur, maybe is just considering, maybe is just, you know, at a moment in their careers when they are considering a change? What would the current environment inspire you to do if you were like, you know, 35 and considering changing careers? Or answer any other question that you think would be better than this.
I will start because I really like this question. I think find their greatness, find the thing where they are the best at, and do it and live the life of their lifetime, and do. And also, I think a more practical advice is to choose right the partner. There are many situations in which the investor, the partner with whom you go into this journey, early stage or at a later stage, that is a car crash because of egos, because of different things. So you choose right, look for red flags in negotiation and in human interaction early on.
I could continue on the same page, because also in my case, related to your question, Sergio, I used to be a banker for 20 years. Then I just have this feeling that I should do something totally something else than in my previous life after 20 years of banking. It was I just felt it. It is the right moment to make a change. Yeah, you have to. Everybody is different in terms of what you have as a buffer, what your cash flow is for the next period, and how could you deal also on your personal needs or the family needs. But I felt that coming out of this comfort zone of being a banker, I just felt my new what age you told me that I have? It's 25 or so. Yeah, it brought me back with 15 years. Also, I'm 46 now, but the new muscles of where I felt alive again. So it's if you feel this appetite for doing something else, the entrepreneurship and what you can build with your hands in this period, yeah, it's a very good timing to do so. And the environment itself, it should be helped by new people, bringing in knowledge, bringing in new money, and people are valuing the experience of corporate people because they are better organized, they have the knowledge, so they just need the money and the courage to do it. So it's about the feeling, and I think it's a good timing to go on with this feeling if you have it.
Yeah, done me? Okay, I'll go. So I'll echo on something that Andrei said. I think it's a great thing, and I'll share my screen for a second. And just, you know, I think, I don't know how much of you have read those famous blog by Mark Andreessen, who is arguably probably the one of the best VCs, founder of Mosaic back in the days, you know, the first internet browser. And this is, it's time to build. And I'll echo on what Andrei said, you know, because I think current situation and the current crisis, it's time for builders. And it's not just like technology, not just like, it might be something as pure as masks, you know, on the market, but like people that are contributing positively to the other people, to the other people's life with building things. And the more builders we have, the better it is. Now, not everybody, we as VCs, we are not builders. We are actually supporting builders. But on the other hand, like the more builders we have, the better place it would be. And I think that's it's one of the best things I've read. It's kind of a it's not that it's so much profound, but it's kind of a timely put and really focus on the real things, what could make an impact in the world. And I've also seen that here more in particular, the tech community have been so much, not only saving your company, but contributing to the others. I have a lot of friends that have raised from startups, from tech companies, and have raised money for hospitals, etc. And I've seen how the entrepreneurship mindset has actually helped something where unfortunately the official governments have been behind. So from that perspective, I think if you could focus on building, and if you could focus on leading, those type of, initiatives which helps others to thrive, that's the best thing you could do, right?
Okay. So it's very difficult to follow anything that was said here. I mean, to follow after everything that was said here. Sorry. Sorry. Okay. I think, man, and I mean by that, I mean people, we all forget how strong we are in difficult times. In difficult times, we tend to forget. So I think a very important tool for these times is visualization, right? So absolutely. This is one of the best tools for an entrepreneur, if it is early, if it is later. Visualization. Remember yourself where you want to be and how you're going to get there, how you dreamed to get there. And maybe you have to postpone a few things for 3-6 months. Well, it's not a disaster, So visualization is something that helps people in very bad times, really. And I personally learned it in sport, I was doing some contact sport, and then after you finish all your training, the trainer comes with his hands like this. It is boxing, right? The trainer comes with his hands back and smiles and says, now we bloody start, So that's the moment when you are ready to give up, I'm telling you. So, but then it starts. And you know what? It's in entrepreneurship, it's absolutely the same. Now it starts. You thought that you just but just made it. Oh, I raised the money. You know what? Now it starts.
Okay. Thank you so much. It was a wonderful evening. Thank you, Simona, Stan, Andrei, and Dan for great insight. I think, this is the first leadership in times of crisis with a, if you want, crisis that is less of an epidemic crisis and more of an economic crisis. I think there is lots of leadership that we can get from investors because they are the ones that are betting on trends and they are creating future happen in a way through that financing. I think we are at a time when, everyone has at least one question mark of, should I do what I did? Should I add something more? Should I do something else? Is this the time? And we still have to carry on and to push the history forward. Whether this means face masks or being Elon Musk's is for everyone to decide and grow into that position. Thank you so much. Have a great evening.
Thank you. Appreciate it.
Thank you. Thank you.
Goodbye.
All. Bye.
Thank you for the invite.